In our last video, we discussed the 8 principles guiding the interpretation of tax statutes as a way of laying the groundwork for understanding tax legislations in Nigeria. In this video, we will be diving deep into the interpretation of the Companies Income Tax Act, starting with Section 9. It is important to note that Section 1 to Section 8 of the Act has been repealed. This means that the law governing those sections has officially been abolished or revoked, and it no longer holds any legal effect. And that's why we will not be starting with them. Now, let's talk about our approach for this series. We will begin by reading Section 9 of the Companies Income Tax Act verbatim. Then we will provide a literal interpretation, followed by a thorough analysis, and finally we will provide practical case studies to demonstrate how these tax laws apply in real-world scenarios. So stick with us to the end of this video. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of Taxmobile.Online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Section 9. Charge of tax. Subject to the provisions of this Act, the tax shall, for each year of assessment, be payable at the rate specified in subsection 1 of Section 40 of this Act upon the profits of companies occurring in, derived from, brought into, or received in Nigeria that are not subject to tax under the Capital Gain Tax Act, Petroleum Profits Tax Act, and Personal Income Tax Act. Such profits shall include any trade or business for whatever period of time such trade or business may have been carried on. Rent or any premium arising from a right granted or any other person or the use or occupation of any property, and where any payment on account of such a rent as is mentioned in this paragraph is made before the expiration of the period to which it relates and is included for the purposes of this paragraph in the profits to company, then so much of the payment as relates to any period beginning with the date on which the payment is made shall be treated for these purposes as accruing to the company in proportion from day to day over the last mentioned period of over the 5 years beginning with that date, whichever is the shorter. Dividends, interest, royalties, discounts, charges or annuities. For the purpose of this Act, interest includes compensation payments received by a borrower from its approved agent or a lender in a regulated securities lending transaction, provided that the underlying transaction giving rise to the compensating payment is a receipt of interest by a lender on the collateral it received from its approved agent or a borrower in a regulated securities exchange transactions. Dividend includes compensating payment received by a lender from its approved agent or borrower in a regulated securities lending transaction. Any source of annual profit or gains not falling within the preceding categories. Any amount deemed to be income or profit under a provision of this Act, or with respect to any benefit arising from a pension or provident fund of the Personal Income Tax Act. Fees, dues, and allowances whenever paid or services rendered. Any amount of profits or gains arising from acquisition and disposal of short-term money instruments like federal government securities, treasury bills, treasury or savings certificates, debenture certificate, or treasury bonds. Provided that for the purpose of this section, securities or shares shall not be deemed to be disposed of by the lender, borrower, or approved agent, or acquired by a borrower, approved agent, or lender if such securities or shares are transferred from a lender and subsequently returned by a borrower in a regulated securities lending transaction. Profit from securities lending other than compensating payment to the lender or borrower. For the purpose of this section, interest shall be deemed to be derived from Nigeria if There is a liability to payment of the interest by a Nigerian company or a company in Nigeria, regardless of where or in what form the payment is made. Or the interest accrues to a foreign company or person from a Nigerian company or a company in Nigeria, regardless of whichever way the interest may have accrued. In this section, dividend means in relation to company not being in the process of being wound up or liquidated, any profit distributed, whether such profits are of capital, natural or not, including an amount equal to the nominal value of bonus shares, debentures, or securities awarded to the shareholders, and in relation to company that is being wound up or liquidated, any profits distributed, whether in money or money's worth or otherwise, other than those of a capital nature, earned before or during the winding up or liquidation. Now, let's move on to the interpretation, analysis, and case studies of Section 9, subsection 1. The section states that companies in Nigeria must pay a tax on their profits each year, and the tax rate is specified in Section 40 of the Act. The types of profits that are subject to this tax include income from business, rent, dividends, interest, royalties, and other sources of annual profit. It also covers certain payments and benefits received by companies, such as compensating payments from securities lending transactions and profits from the acquisition and disposal of short-term money instruments like government securities and treasury bills. It clarifies that certain actions related to securities or shares in regulated securities lending transactions are not considered as disposals or acquisitions for the purpose of this tax. It includes profit from securities lending other than compensating payments to the lender or borrower. Now, let's analyze what this means for businesses operating in Nigeria. The section outlines the scope of profits that are subject to tax for companies in Nigeria. It provides a comprehensive list of the types of income and benefits that fall under the tax regulations, including income from business activities, rental income, dividends, interest, and various other sources of annual profits. Additionally, the provision offers specific details regarding securities lending transactions and the taxation of profit from the acquisition and disposal of short-term money instruments. By delving into these details, the aim is to provide clear guidance for companies to understand their tax obligations. As this clarity benefits businesses, it also ensures that tax authorities have a robust framework for enforcing regulations across a diverse range of profit-generating activities. Now, let's simplify things by exploring some case studies. Case study 1. Company A operates a business in Nigeria, earning income from the sale of products and services. The profit generated from these business activities are subject to taxation under this section. This may include the revenue from sales minus the expenses incurred in running the business, such as salaries, rent, and utilities. Case study 2. Company B owns commercial properties in Nigeria and earns rental income from leasing out these properties. The rental income falls under the scope of profits subject to taxation as outlined in the section. Consequently, Company B must report this rental income and pay tax on it in accordance with the tax regulations. Case study 3. Company C invests in government securities and treasury bills, earning profit from the acquisition and disposal of these short-term money instruments. The profits derived from these investments are considered taxable under the provision of this section. Company C needs to include this investment profit in its tax calculation and fulfill its tax obligations accordingly. Case study 4. Company D engages in securities lending transactions where it receives compensating payment as part of the lending agreement. The section specifies that profit from securities lending, including compensation payments, are subject to taxation. Therefore, Company D must account for this profit from security lending in its tax filing and pay the applicable taxes on them. These cases illustrate how various types of income and transaction are covered by the tax regulations outlined in this section. Let's move on to the interpretation, analysis, and case studies of Section 9, subsection 2 and 3. This section defines how interest and dividends are determined to be derived from Nigeria for tax purposes. Interest will be considered to be derived from Nigeria if it involves a liability for payment by a Nigerian-based company, regardless of where the payment is made, or if the interest accrues to a foreign company or person from a Nigerian company irrespective of how the interest was accrued. The section also defines dividend in two contexts. For a company that is not being wound up or liquidated, dividend encompasses any profit distributed regardless of whether they are of capital nature. This includes the nominal value of bonus shares, debenture, or securities given to the shareholders. For a company in the process of being wound up or liquidated, dividend includes any profit distributed other than those of a capital nature earned before or during the winding up or liquidation, whether in money, money's worth, or otherwise. As for the analysis, this section provides clear criteria for determining the origin of interest and dividends for tax purposes in Nigeria. It establishes the conditions under which interest will be considered to be derived from Nigeria, linking it to the liability for payment by a Nigerian company or to the accrual of interest from a Nigerian company by a foreign entity. The definition of dividend underlines the scope of profits distributed by companies, whether in the regular course of business or during the process of winding up or liquidation. By distinguishing between the treatment of dividends for companies not being wound up and those in the process of winding up or liquidation, the section addresses different scenarios and ensures that the tax treatment aligns with the specific circumstances of the companies involved. The clarity provided by this section supports the objective of ensuring consistent application of tax regulations and preventing disputes over the taxation of interest and dividends obtained from Nigerian sources. Now, let's look at the case studies to simplify. Case study 1. Company X, a foreign entity, has invested in bonds issued by a Nigerian company and earns interest payment from this investment. According to the section, this interest payment will be considered to be derived from Nigeria even if the actual payment is made outside Nigeria. This means that Company X will need to comply with Nigerian tax regulations related to the interest income earned from the Nigerian company. Case study 2. Company Y, a Nigerian company, has issued bonus shares to its shareholders as part of its dividend distribution. According to the section, the nominal value of these bonus shares is considered as part of the dividend for tax purposes. Company Y will need to account for the tax implications associated with the distribution of these bonus shares to its shareholders. Case study 3. Company Z, which is in the process of being wound up, distributes certain profits to its shareholders. This section stipulates that in this context, the distributed profit not of a capital nature will be considered as dividend for tax purposes. Company Z must ensure that the tax treatment of this distributed profit align with the regulations specified in this section, taking into account the specific circumstances of the company's winding up process. The case studies illustrate how the provisions outlined in this section apply to different scenarios involving the derivation of interest and the distribution of dividends in the context of Nigerian tax regulations. And there you have it. Thank you for joining us in this exploration of Section 9 of the Companies Income Tax Act. In our next installment, we will continue our journey by interpreting and analyzing other sections of the Companies Income Tax Act. Don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.